Hey there, guys. Let's look at the stock market. Let's look at some charts. Let's try to figure out where this is going. All right, so that was a pretty bullish day, I would say. Definitely felt bullish. And what does that mean? Well, you know, when you just feel emotions and you feel like bullish, that's usually how they get you, is to make you feel a certain way. We don't, we throw the emotions out and ultimately just look at the charts. So as long as technically there's no change or there is a change, then we act based on the technicals. We don't, hope that markets are going higher. We don't hope that markets are going lower. We just look at the charts, read what the charts are telling, make decisions, and then adjust those decisions as the information changes. So let's get into what we saw today. So today felt very bullish because, 900 point day in one day. A lot of that was made in the gap, gapped up, and then spiked a little bit, and then just kind of held those gains. So what happened? Look at the Nasdaq futures. So here's the breakdown we had the other day in the Nasdaq futures. The reason why I like to watch the Nasdaq is this market's pretty much been mostly about tech, the rally. So we came down. And then what did we do today? Well, today we just came right back up to that level. So this is the resistance level, 9332, and we just closed right at that level. So you could read that as strong because we're able to come back into the level, but technically it doesn't mean that this is a breakout or anything like that. It just means that we're chopping around a range. So that's the futures. It shows a little cleaner. Let's look at the SPY, and then I'll show the Q. So here's the SPY, right? And this is basically the top of the range right here, 294.50, right around there. You could move it down slightly if you want. Maybe it's down here at 294, but ultimately, here's the high right here, and we popped up and closed. We didn't close here for no reason. We closed here because the market saw that this high right here was right there. So is that a close on support, or is that a false break higher? All right. Well, we got to look for a few more signs to figure that out. For one, okay, we gapped up. That's impulsive, but it wasn't a gap. It wasn't a breakout gap. An impulsive gap up would be a breakout of this range. So if we gapped way up here and created what I would call a bear trap, then that would be an impulsive break. And if it gapped and then continued to run higher, that's very bullish price action. But I don't see any bear trap yet. So maybe that comes tomorrow. I don't know. But ultimately, there's no bear trap here. This is just a big, long sideways trading range that we've been in. And yeah, today felt bullish, but if you go back to April 29th, 2 weeks ago, we were at the exact same level. So you could say that we felt real bullish there too, but that was followed by a sell-off or correction or whatever of 5%. And then again, we hit it again just last Thursday, and then or not last Thursday, last Tuesday, I believe. And then so that felt bullish, and then that was followed by a sell-off. So if you really look at what's been going on, it's chop. All right, up, down, up again. This is just chopping people up. So bulls feel emboldened on days like today. Bears feel emboldened on big crash days like, sell-off days like that. And we've just been in this big sideways trading range. So momentum is not up. Momentum is sideways. It's flatlined. So what does this mean? Well, let's look at some more signs here. Look, we had a marginal high right here. We broke to a new high today. And all day it was above that high all day long, every single hour, except for the last hour, came back down, closed it right at, that level. All right, let's look at the volume. Now you broke to a high here, and here's the daily. Look at how this daily looks. That doesn't look bullish. I mean, yeah, okay, if you just look at price action and you look at, the Dow Jones, how many points we gained, then you think it's bullish today. It's not necessarily bearish, but at the same time, it's not bullish. It's kind of a neutral area. I mean, ultimately, we are at resistance right here. And you short at resistance and you go long at support. That is the status quo, basically. Well, look at this big tail wick right here. So you had the tail wick, so you overshot the level, sucked in some breakout bulls, and then failed and closed right at resistance. So what I'd want to see tomorrow is some sort of a bearish move. Maybe a gap down, or just some sort of a sell-off. That would reinforce this tail wick right here and reinforce that this is resistance. We're going to move lower. If we move higher, we'll have to watch it. There is a level right here at 301.80, or maybe it's 302, but you can see this is the top of the range. It's about 302, I guess. But we got a level here, reaction here, and then you came here, some reactions right in here. Look where this candle closed right there, right at that level. So maybe what they want to do, and I could easily see this playing out, is this would be the true bull trap, I guess. Would pop it to the upside around 302.50, maybe overshoot that intraday or something like that, and then that's all she wrote for the move up. And then after that move higher, you would expect to see a reversal, a gap down, something, probably a gap down for it to create that bull trap, and then down we go. So that's just one possible option of what might happen. But the reality is that technically we're still sideways. All right. So this is not, cheer on the bulls, and it's not really cheer on the bears either. It's just sideways. So my videos are all about, we're in a bear market rally. And, I think that this is the first leg down. This is your corrective wave. And then this is going to be your next leg. And this price action here is the chop. Or, a lot of the time it's a topping pattern. When volatility picks up, when you start to see volatility increasing or chopping around it, which is what we've seen. Look, we've gotten bigger moves down here, bigger moves with gaps. Volatility's starting to pick up a little bit. When volatility picks up, then you'll see, that oftentimes is a battleground or a point of indecision. Volatility is obviously down today because you had the gap higher, but volatility was just increased the other day. So volatility is kind of waffling, higher and lower, which is just increased volatility. It's just showing that there's movement happening. We're getting ready to break this zone here. Do we break it to the upside or the downside? If we break it to the upside, then do we fail around this 302, or do we break it and hold strength and then continue higher? All right, that's one possibility. I think we break, I could easily see us breaking to the upside around this 302. I just think that's the final move. I think that's the topping move, creating the bull trap, sucking in any bulls. Maybe we even chop around this level for a little while, just suck in a lot of bulls. Then you get some sort of a gap down, and then that's all she wrote. Again, if this is a bear market rally, you got to trap in those bulls. So the bulls need to be trapped in, thinking markets are going higher. I think it's done a pretty good job of trapping in a lot of bulls. I've seen a lot of people thinking the market's going higher, and so I think that's done a good job. And this chop action does that quite a bit too. So maybe we just do the final break, suck in the last bulls on the breakout, and then it's a false breakout. That's what I think happens. However, we'll have to wait and see. I mean, a break higher up to 302 almost would be expected, because that's the thing. Whenever you look for, I'm always looking for bull traps or bear traps, and I don't see a bear trap. There's nothing here. There's no like breakdown below support and then recovery. That would be a bear trap. I don't see any of that. All I see is a zone, and we've been chopping up and down in that zone. So that means maybe it's a bull trap, and maybe we break higher and then fail. Again, I just look for those things. If I see it, I'll point it out, let everyone know. As of right now, just closed right at resistance right here. Let's look at the Qs. Same deal. Go to the hourly chart here. Qs is in more of an uptrend. Qs is like an uptrend, but it's still this chop zone basically, but it is uptrending. So definitely more bullish on Qs, more bullish look, but let's narrow it into what's actually happening, because here's the thing. If you look at this chart on the daily, yeah, we're bullish down here. It's all been bullish. This is bullish, but now this is the point in this area where we start to look for an inflection point or a change. I'm looking for a reversal and a continuation of the downtrend. These are the big moves I'm trying to spot where the big money is made. A lot of the big money can be made catching these big moves. I mean, obviously, yes, you can trade in and out every single day, and I do quite a bit of that. But at the same time, I do look for swing trades and major positions on the next leg down. So that's why I think this area, narrowing it down right into here, is so important to read what these candles are telling you, because we're at that point. See this gap? This is the point where the market's going to make its move, essentially, whether it's a fake out move, we move higher and then it fails and rolls over, or we gap lower. There's some sort of move that's most likely going to happen right in here that is going to be the tell that we're going to roll over. So I'm looking for those signs. Here's what I see today. I see a pop. Look, this is the bearish engulfing candle that we had the other day, and an outside day. This is an outside day and a bearish engulfing candle. So that is a bearish reversal candle, and then we got follow through confirmation candle. So that's bearish, but yet we then got had a gap higher and a move higher. So, but where did we close? Well, we closed right at the top of that breakdown candle. So that's resistance. That is the resistance again. Also, look, we're in the gap again. So that. I don't like the fact that we're in the gap again. All right, that I will say, I will give that to the bulls. Usually when you're in a level, if you come back into the, if you're in a major zone and you fail and then come back into that zone, a lot of the time, you'll move higher or fill the gap or something like that. So I don't like the fact that we're in the gap again. That is one thing that gives me pause at this time. But look at this candle. We popped up, almost filled the gap, couldn't do it again today. So is tomorrow gap fill day? Maybe we open higher right at the gap and then sell off. I don't know. That would be a pretty objective area to short. Right at gap fill, especially on the open. I mean, a lot of sellers will just see that, and I think that would be the area that would be a really good short. Although I think we're probably in a pretty good area right here to be short as well, and that's why I continue to be short. But again, look, you popped up and then failed, closed right at resistance, which is this breakdown candle. So that's really all I see on that one. If I go to the hourly here, actually one more thing. If I go to the daily, volume did pick up a little bit today. All right, a little bit more volume than what we saw previously. We entered the gap. Here, these green candles right here is where we previously entered the gap, and it was really low volume, and it just looked really suspect to me. And sure enough, that played out for a drop. And then today, though, so we saw a little bit more volume, but this isn't breakout volume, and that's why we didn't break out. Essentially there was no real breakout. Look at this. Here's the hourly chart here. So here's the top of where we were at. This is resistance. Look what happened today. Ramped up, ran through it. Look, here's your breakout. Look at the breakout volume on this hourly candle. So you broke through it. You had volume pick up right there on the hourly candle. Then we just kind of sold off and volume got light and we started selling down. And then at the end of the day, we saw some increased volume bringing us right down to that trend line. So does this hold as support? It could. If that holds the support, maybe we gap up tomorrow or move up tomorrow right to the top of this gap at 229.40, and we'll have to see what happens there. If we fail here, this level right here is resistance, 227.59. We were not able to get the daily close above that. We had the daily close below it, pretty much right on it, at 227.50. So we closed right on resistance. So we have to wait for what happens tomorrow. So we'll go ahead and watch for that and see what's going to happen. But again, we're in this gap for the second time, a little bit more volume. However, still failed that resistance. So that's interesting. I think what happens, honestly, we could 50-50 for me. We either gap down tomorrow, back down to this 223.30, or we move up to fill the gap. It's once gaps are entered, a lot of the time they're filled. We're really, really close. We got really close today. So it could go either way ultimately. But regardless, I still think that the next move is not the next big move, 20%, 30% is to the downside, not up. I think it's minimal upside from here and a lot more downside. So time will tell whether I'm wrong. Here's XLF. Now this is a bear trap right here. See this? You had the support line, you broke down, came back and retested it, and trapped in bears basically right here, and then the following day, today, gapped higher and ran higher. So that is a bear trap. You trapped in the bears right there. That is bullish. That is probably good for some more upside on XLF. And so we'll have to continue to watch that. But there is, see if we can find these trend lines. Yeah, maybe right in there, somewhere right in there. So let's watch for that. And that level is 23.68 would be probably the next resistance. And then here's your support, 21.30 roughly. Let's look at XLV. Look at this, XLV. Same deal. They make it seem bullish because they give you this gap. So you wake up and you're like, oh, everything's up 700 points. It's great. But in XLV, that was, the high of the day pretty much was the open. If we go to the 5 minute here, you'll see, basically the high of the day. So when you woke up to a gap up, if you went long that breakout, because it was a breakout, then you lost money today. And it sold off all day, closing right at the trend line right there. So you can see here's the trend line. It's within pennies basically. And my trend line again could be off. You could move it to here. I'm just trying to capture the most reactions I can find, and I've got a reaction here, reaction here, reaction here, and then these are kind of overshoots as well as today. So let's see what tomorrow brings. I suspect tomorrow we'll gap back below resistance and sell off, but again, it depends on what the general market does. But again, technically nothing really happened here in this chart. Ultimately, yeah, if you got scared out of your short position, then you lost money when they gapped it higher. They do that. They don't want shorts. They don't want a bunch of people taking shorts, so they got to shake them out. And these are the kind of moves that shake people out. And sure enough, sells off. It's right there. So, ultimately, if you took the breakdown of the bearish rising wedge on XLV, then, you would have probably gotten in somewhere right in this range at around 150. And you're only down, you're down 0.5% in basically a month or two, so since April 20th. So, this XLV's gone nowhere. That's the point. And so keep an eye on that. Walmart. All right. So this thing filled the gap. Here's the gap fill. Let's go to the daily here. So moved against me today. Here's my entry was right here. So ultimately, my entry was basically here, and I'm up about 0.3%. So we'll call it flat. So that's all that's happening. When you're swing trading or trend trading, you have to be willing to give back some profit if you want to catch the big gain. So that's all. As long as the technical picture isn't broken. So again, we're closed at resistance. Let's watch this, see what it wants to do. Apple's just back testing. See this trend line? Nice rising trend line right here. Breakdown, doing some back test. This can easily roll over and set the tone of the market bearish in, tomorrow it could do that. So we don't know what's going to happen, but ultimately the technical posture is still bearish. This is bullish posture here when you're in a rising trend. You break trend, we're now bearish. Trend is now broken. So anybody that's riding the bullish trend, the remaining bullish price action here is merely, potentially only going to be, it's limited. Let's just say that. The upside is probably limited. All right. We could pop up and do a full back test and then fail. We don't know where it's going to go, but I see the trend broken, so I'm looking to play the other side. Microsoft is doing nothing. It's just basically uptrending in this channel here. We had the bearish rising wedge that was broken, and now we're just uptrending in the channel, just chopping around with a slight upward bias. But again, given that we had the bearish rising wedge breakdown and sell signal, And this was a full back test, right? Well, sorry, that's not a full back test. I just drew this trend line out to make the top of the channel, but ultimately this doesn't have to be the top of the channel right here. We'll have to wait and see if we get another reaction right there. So not a valid, this top one right here is not a valid trend line. All right. I just have it marked out in case it holds out to be true. But Microsoft could easily start to sell off. Again, it's just not doing anything. Tesla chopping around here. Here's your resistance right here at 801.50. And look, we gap up, sell off. It started to bounce off of it. So maybe that's going to hold as some sort of near-term support. But again, it's done this several times. Here, we've been above it. We're just chopping around. So very hard to trade, and take a position for, you can day trade it. You can take the small little scalps. It's hard to catch that big move when everything's just going sideways right now. TVIX. So I took a small position in this one today. And the reason I did is, look, all we did is fall right down to support. Here's your trend line on an hourly chart. You can draw it out. Reaction, reaction, reaction. Here's the false breakdown in volatility. So you broke down, recovered. We caught this trade right here, this nice momentum rise. That was a rocket ship higher from the lows. That was a 83% higher. I didn't catch all of it, but I caught a good portion of it. And then we started to sell off, gap down right to support. So there it is, right at support. What are we going to see? Well, I could easily see us gap down tomorrow and then instantly recover. That would be something. Or we could just gap higher. Ultimately, it's at support. So I don't know what it's going to do at support. All I know is you buy at support. You sell at resistance. And then you wait and watch what the market gives you after that and manage your trade. SOXX. So that was up, today. Of course, it was down last week. So ultimately, and I haven't even marked this out, but here's the high that we were at, and we closed right at it. So closed right at resistance. Nothing's really changed. It's just we're going sideways. We're chopping up and down, chopping everybody out. So in this kind of a market, it's, you have to kind of just ride it out a little bit. When it goes against you, you just sit tight. When it goes for you, you sit tight. You don't want to take profit when it's going for you in case there's a big move coming, but you don't want to get shooken out if the move goes against you either, because that might be all that there is. So ultimately, the market will show us where the next major trend is going to be. It'll probably do that pretty soon. We've been in this sideways trading range for quite a while now. So, all right, NVIDIA. All right, so I took a position on this one on Friday. I closed it today, though, for a small loss. I didn't like this price action. It is a gap up, and, if we gap down, that would be an island top reversal. So maybe I'll just wait for something like that. I was looking for, what I was looking for, I removed the trend line, but you had this trend line like this, basically, and you had a lot of reactions, then you had the breakdown, and then it ran up and tagged it, but then it gapped up above it. So I'm just going to wait and see what happens on this one. I don't have to take a position in this. Obviously, I have large short positions, so I don't need to, add this one in. It was a small position. I was just taking a pop shot on it. I know there's been a lot of momentum in this stock, so, I was just looking for that to fail right there, and it didn't. All right, guys, so just to reiterate, just to wrap this up, I know that the market feels bullish, and it does to me too. When I feel, when I get emotional and see the market price action moving against me, then it tends to cloud your judgment. So what I like to do is always keep an eye on my charts. Wait for the daily close to make a decision. If you're in such a critical area, don't get spooked out by overshoots or stop rates. Basically, this could be a stop rate, and it hopefully, if you were short, that didn't spook you out. But again, and same for the bulls. Here we sold off. Well, we hadn't broken. We sold all the way down. Down to here, but we hadn't broken the technical support. So there's no reason to get out of your bullish position. Ultimately, this is a battleground. So at some point in time, either the bulls or the bears, someone's going to figure out that they're right, and someone's going to figure out they're wrong. You know, I think the probability says that you know, it's going to go down. I see that in the charts. That's kind of my read on it. But again, I could be wrong. So don't completely load the boat, or just take the risk that you feel comfortable with. Ultimately, you know, I'm okay taking risk, and as long as my charts are still technically sound and I don't see anything that is telling me to get out, then I'm okay. One final thing to look at, I do want to point this out. This is a triple Q chart that I brought up. See the RSI, we hit 70 today in the RSI on the daily, I believe. Let's look at the daily here. No, not quite 70 on the daily. We're up close to the overbought area, 64. So again, RSI doesn't mean anything unless you combine it with other technical indicators. So that's just something to look at. All right. So we're getting close to being overbought, and we're also at resistance. So what happens next? Do we break resistance and move higher? Do we break it and fade and fail and create that bull trap? Or do we just gap down and start to move lower down? Those are the three scenarios. We'll have to wait and see. All right, thanks, guys.